The global economy woke up to a seismic shock. China announced a sudden halt on key exports to the United States, a full stop, not a minor trade adjustment. The ban targeted rare earth elements and high-purity metals, the backbone of American industry. Overnight, the flow of these essential materials ceased, tearing a hole in the global supply chain. Rare earths, 17 metallic elements, are vital for everything from smartphones and electric vehicles to military hardware. China's message was clear. The resources powering America's tech and industry were now weapons in an escalating economic conflict. For American businesses, this was a moment of reckoning. Executives scrambled for answers. Was this a temporary tactic or the start of a new era? The immediate impact was chaos. Supply chains built on just-in-time delivery faced empty warehouses and idle lines. For most Americans, rare earths sounded obscure, but their absence threatened daily life. Cars, laptops, even hospital equipment depended on them. The sudden stop was more than a headline, it was a direct threat to the American way of life. The question was no longer if there would be an impact, but how devastating it would be. The world watched as the first domino fell. China's export halt was a calculated countermove in a high-stakes economic chess match. The U.S. had imposed strict controls on advanced semiconductor exports to China, aiming to slow Beijing's tech ambitions. Companies like Nvidia were barred from selling their most powerful AI chips to China, targeting its military and surveillance tech. From Beijing's perspective, this was economic aggression, a direct threat to its rise as a global tech leader. In response, China leveraged its near monopoly on rare earths, producing over 90% of the world's supply. The export ban was a proportional response. If the U.S. could target China's tech sector, China could target America's industrial base. Beyond retaliation, the move exposed Western dependence on Chinese manufacturing and accelerated China's push for self-sufficiency. The message was global. China would use its economic leverage to defend its interests and reshape the rules of trade. The world's supply chains, once seen as stable, were now tools of geopolitical power. The U.S. and China had entered a new era, one where economic weapons could be as powerful as military ones. The shockwaves would be felt far beyond the negotiating table. The global order was shifting, and no one could predict where it would settle. The stakes had never been higher. China's export halt sent shockwaves through the American economy, far beyond the tech sector. Detroit's automakers were among the first to feel the pain. Rare earth magnets are essential for electric vehicles and hybrids. Aerospace and defense industries, reliant on high-performance materials, faced direct national security vulnerabilities. The Pentagon scrambled to assess inventories and find alternatives. Consumer electronics manufacturers faced immediate shortages, while the green energy sector saw major projects delayed. Even medical equipment like MRI machines was at risk. The crisis exposed a fundamental weakness. Decades of prioritizing efficiency had left America dangerously dependent on a single supplier. The pursuit of low costs had created a fragile supply chain. Now the entire industrial base was exposed to geopolitical risk. The wake-up call was brutal and impossible to ignore. No company embodied the US-China tech war like Nvidia. Once dominant in China's AI chip market, Nvidia was hit hard by US export controls. In early 2025, the company lost billions in revenue and unsellable inventory. Its market share in China plummeted as it scrambled to design weaker export-compliant chips. Meanwhile, a black market for banned Nvidia chips flourished, complicating enforcement and drawing government scrutiny. China responded by accelerating its own chip industry. Huawei's Ascend 910C quickly became a formidable rival. As Nvidia's share fell, Huawei's rose, capturing a quarter of the market. CEO Jensen Huang criticized US policy, arguing it hurt American business and sped up China's self-reliance. The tech war's unintended consequence: it fueled China's innovation and created a stronger competitor. The battle for tech supremacy was now a race, one with global consequences. The lines between economic policy and national security had blurred. The stakes for American tech leadership had never been higher. The world was watching who would adapt fastest. Detroit's automakers faced an immediate crisis. China's halt on rare earth magnets threatened the production of electric vehicles and hybrids. Billions invested in EVs were suddenly at risk as supply chains ground to a halt. Automakers frantically audited inventories and searched for alternative sources in countries like Australia and Vietnam, but building new supply chains would take years and massive investment. In the meantime, engineers raced to redesign motors and recycle rare earths from old products, solutions that meant higher costs and lower performance. The industry's vulnerability was laid bare. The scramble forced a painful rethinking of global sourcing strategies. Resilience, not just cost, became the new priority. The crisis triggered a monumental shift in American business strategy. The era of relying solely on China was over. Diversification and reshoring became the new mantra. Companies scouted new partners in Vietnam, India, Mexico, and Malaysia, seeking stability over cheap labor. Major corporations announced moves out of China, while tech firms explored Southeast Asia and Latin America. The U.S. government offered incentives to rebuild domestic manufacturing, especially for semiconductors and rare earths. Reshoring was costly and slow, requiring new factories, skilled workers, and regulatory navigation. Breaking old supplier ties and building new ones brought logistical nightmares and quality issues. No single country could replace China's vast ecosystem. The result, a more fragmented, complex global supply chain. Companies now manage multiple suppliers to avoid future vulnerability. The great pivot had begun, reshaping the world's manufacturing map. The trade war's fallout hit ordinary Americans hard. Factory slowdowns and shutdowns led to furloughs and job losses, especially in manufacturing hubs. Workers faced anxiety and uncertainty as the promise of stable jobs faded. Consumers felt the pinch as prices for cars, electronics, and everyday goods rose, not from demand, but from supply chain chaos. Inflation added to families' financial strain. China wasn't immune, its factories lost orders and workers faced layoffs. The global economy slowed as uncertainty spread. A brief U.S. halt on ethane exports to China showed how deeply intertwined the two economies remained. Both sides suffered, highlighting the double-edged nature of economic conflict. Businesses hesitated to invest and consumers grew cautious. The human cost was measured in lost jobs, higher prices, and growing insecurity. The world learned that economic weapons cut both ways. The pain was real and widespread. The 2025 China export halt marked a turning point in global trade. The crisis shattered the belief in ever-flowing, stable supply chains. U.S. companies scrambled to diversify sourcing and invest in new regions, sparking a wave of innovation and realignment. The future of trade now looks fragmented. Competing economic blocs are replacing the seamless global factory. The U.S. is strengthening ties with allies, while China doubles down on self-reliance and new partnerships. Navigating this new landscape demands agility and constant risk assessment. Reshoring critical industries will take years, leaving companies exposed to further shocks. The threat of permanent export bans looms, especially for defense contractors. The crisis forced a rethinking of globalization's hidden risks. Resilience and security now rival efficiency as top priorities. The underlying U.S.-China tensions persist, and the rules of global trade are being rewritten in real time. The future remains uncertain, but adaptation is now the only way forward.